yeah, really good return on invested capital numbers here. Hey everyone, today I'm taking a look at ASOS because it's been highly requested here on my channel. I'm going to do a quick valuation of it near the end. I'll go through my 9-point checklist first and then give you my opinion too. So let's jump in. ASOS is a British-based online fashion retailer, so they do a lot of their sales in the UK, they have some in the US, Europe and Australia as well. They're a $3 billion market cap company at the moment. My issue a little bit with fashion companies is, well, fast fashion is something that I'm not really that supportive of. I don't like the idea of people buying clothes just for one season and not wearing it ever again. And the environmental concerns I have with like having things shipped from Bangladesh over to over to the distribution centers and then shipped again. And I just feel like there's a lot of costs involved in sending something that's pretty cheap. Don't really like that particularly. That is my concern. I'd be very interested to see how ASOS are addressing these concerns in their annual reports. I want to really know also that whether they have a competitive advantage. We got Boohoo, Zalando, then you've got just the big ones like Zara and Mango and things like that. Look, fashion is very, very competitive. Now I'm in Ukraine and I swear every third person here is a fashion designer. So look, it's a very competitive landscape. It is very fragmented, which may be good because there's a lot of consolidation to happen and a lot of market share to be taken. But look, fashion is really trendy and staying on trend is, I don't know, it's just something that always has to be done. So not sure what I think of this industry. Customer satisfaction for ASOS is key. And I think that's really important because they try to make sure that their customers are getting free shipping and free returns and all that stuff that adds to the customer experience and hopefully keeps them as long-term customers. This is how Nick Sleep would describe this as a scaled economy shared business because they're passing a lot of these savings that they make from when they get bigger and bigger and bigger onto their customers, creating this long-term relationship. Now, Nick Sleep, as I just mentioned, it's a stock that he brought up in Richer, Wiser, Happier, and he's potentially still invested. And I think that's what has brought ASOS into the spotlight at the moment. So I guess that's a good reason to take a look ourselves. Now, for those who have been following my channel along, you'll know that I don't want to put a course together. I think there are enough courses in the world, and I think there are plenty of books out there as well. But I've actually come across a course that is pretty much ideal. Exactly the type of course that if I was to do a course, I would aim for something like this. Now that I know that this course exists and it is far better than anything that I would put together, I want to highly recommend it to you. The course has been put together by Hamish Hodder. He is also an Australian and he looks at companies in a very similar style to me. The analysis he does is fantastic. Now, Hamish was kind enough to provide a discount code for me and anyone else that I know that would like to join the course. The 30% off code that you need to enter at the checkout is Brown. Again, this is not my course, it is actually Hamish's. So he will answer your questions after you join, which he said he is active there all the time to help answer questions and concerns you have along the way. Now, the course is called Learn by Example, and it is a platform and private community that is not exactly for absolute beginners, but for those who want to dramatically improve their basic understanding of value investing. So Hamish takes you through lots of real company examples, which I think is the best way to learn. It's like the Columbia Business School approach, but like 1,000,000 times more affordable than a university degree. Now, I do a lot of high-level quick analyses here on my channel. Well, this course by Hamish takes you to the next level into a more important, deep analysis. The rest of the information is in the link in the description of this video. Go and check that out. I'm excited to get through all of the content in this course myself. And Hamish is a good guy and I wouldn't recommend this if I didn't think it was any good. Okay, now let's jump into the financial metrics and we're going to start with revenue growth. So we want to see revenue over the past, well, hopefully just growing. And yeah, as you can see, revenue has been growing very nicely, 20-30% per annum here for about a decade. Fantastic revenue growth. Okay, give that a tick. Next up is gross margins. Now, because of the type of business this is and how management team are approaching this scaled economy shared kind of business model, gross margins could be declining and it's still not that big of a deal. It's because they're passing their savings onto the customer. Now, gross margins are actually relatively good here. They're above the 40% mark that I'd like to see. It has been declining the last couple of years. Operating margins though are super slim. So that's where you're seeing the returns going back to the customer. they're really not making a lot of profit here based on the amount of revenue that they're generating, but that might be okay in the long term. That declining gross margin percentage, well, I'm going to have to give them a cross just for that. But like I said, it's above that 40%, so it's probably okay. I'm okay as long as they can do this for the long term and they actually can scale this business bigger and bigger. So we'll give them a cross for now, but something to watch out for. It's not that big of a deal. Next up is return on invested capital, and we want to see that at least double digits. And besides 2019, it's always been double digits. A lot of the time it's been in the 20% range. So yeah, really good return on invested capital numbers here. Give that a tick. Now let's turn to debt. Now debt is the number one reason that a company can get into trouble. And what I'm paying attention to here at the moment is their short-term debt. So this is their short-term assets covering their short-term liabilities. And at the moment, their short-term liabilities is actually greater than their short-term assets. And this is a problem. It means they're going to have to raise some money somehow to cover this amount, or they're going to have to sell some of their long-term assets. Don't like either of these options, so I'm going to give them a cross. Next, we take a look at the free cash flow, and we want this to be growing along nicely because that revenue number's been growing along nicely. But now capital spending, so free cash flow is, the calculation is operating cash flow minus maintenance CapEx or capital expenditures. And if we can look at the capital expenditures from 2017 to 2019, they were significantly bigger than they were previously. So I assume they were building like distribution warehouses or something like that. And the free cash flow was negative for those years. But now it has turned very strongly positive. Maybe that's pandemic related. Maybe they've they have obviously cut back on their cap spending as well. It's probably a mixture of the two. I'm going to probably average out the last couple of years and try to work out some sort of average free cash flow number and then grow that out when I do my valuation. This is pretty difficult to do, and I don't like the variable nature here of these numbers because it just makes my job a lot harder. So I'm going to give them a question mark at the moment because I'm just not sure if it's pandemic related or not, and that's probably my biggest concern. Now, ASOS has their main listing in London on the London Stock Exchange. So I can access that through Interactive Brokers and Saxo Bank. They're my preferred brokerage accounts that I have. I like them because they're stable, they have long histories, they give me access to this international market so I can invest in a company like ASOS directly. They also have low fees. Now, if you are interested in taking Interactive Brokers for a bit of a test drive, if you use the link in my description, you can go and open up a demo account and take a look around how the platform works and whether you can get familiar with it or not. It's pretty simple, I think. Okay, next up is shares outstanding. We want to see this number stable, if not declining. If it is increasing, it means we're getting diluted. So if I look at the shares outstanding, they've been increasing. It was sort of 83, 84 million. Then 2020, it's 90. Now it's nearly 100 million. So yeah, that's a cross. Next, we go look at insider ownership. Now we want the people running the business to be invested the same as the shareholders of the business because it means that, well, the incentives for both parties are aligned, and that's what we want as shareholders. So if I have a look, I've got the CEO, his compensation's about 1.7 million, and he only has about $4.5 million worth of shares in the company. So his ownership in the business is about 3 times as much as his compensation, which is not what I like to see. But if I look at the co-founder, Nicholas Robinson, who is on the board of directors as well, he's only getting paid, his compensation is only $55,000, yet he has about $100 million worth of stock in the company. So his incentives are completely aligned with us as shareholders. So just the fact that he is part of the leadership team and on the board, I'm happy to give this a tick because there's somebody in control there who is got a very big incentive to make the share price improve over the long term and the company do better over the long term. They're not just working for a salary. Next up is whether any super investors are invested. Now, I mentioned earlier that Nick Sleep is probably invested in this company. We don't know for sure, but in the past, he definitely has been invested, so it has passed his filters at some stage. The reason I want to see a super investor invest in the company is because, look, I don't know whether I'm that good at this, and if there is a super investor on board, it just gives me a lot more conviction. Now, last but certainly not least is the price. Price is the most important thing because no matter how good this company is, I don't want to overpay because we will get a poor return on our investment. So to do that, I use my intrinsic value calculator, which is free in the description if you want a copy of it yourself. I've gone ahead and put in a lot of the numbers already. So I'm using growth rates. It's actually analyst growth rates here of about 12, 13% per annum. I'm using my large discount rate, which is incorporating a big margin of safety as well. I've got my multiple. Now, I've just grabbed the free cash flow number from the 2020 year. And that is obviously going to be pandemic related. So I'm just going to show you the differences between what I think an average free cash flow number is and what the actual trailing 12 months looks like at the moment. So all these other numbers here I have found and entered for us, and gives us a buy price of £22. So 2,212 pence. And remember, on the London Stock Exchange, they talk in pence. So just remember that. So the share price at the moment is about 3,000. So it'd still need to fall about 20, 30% before I get interested at this free cash flow number. Now, I'm going to average out the free cash flow now for the last few years just to try to even out that pandemic number. So it actually is about 100, it's about 120, I think it was. So the numbers now, the number I want to buy it at is 800 pence. So with the share price at 3,000 pence, this would have to fall 75% for me to get, for my numbers to make sense for me. So look, I think this is still significantly overvalued. Maybe we could reduce this return on investment number down to say 22%. I'm still only getting like 1,500 or so, and it's double that at the moment at the current price. Okay, now after all of that, let me give you my opinion on ASOS. So unfortunately, there's a large range of free cash flow outcomes. The last year has been really good because of probably pandemic related. I'm not really sure. I would like to see a more stable free cash flow number so it's easier for me to value. Tried to average it out, and the valuation's giving me, it's not giving me anywhere near what it's worth at the moment. So unfortunately, they're also running high short-term debt, which I don't like to see. That would be a concern. That's why I want that big margin of safety. The shares are being diluted at the moment as well, so I wasn't even factoring that into my valuation, which that's a problem. I think it's a challenging industry with all the different competition in the world. Fashion is also trendy, and I think it's just going to be a constant battle forever. Now, I also have a little bit of an issue with fast fashion, and the environmental concerns are related around that as well, so I'd want to go and see how they're addressing it. But I do love how they're focusing relentlessly on customer satisfaction. That's really important, and that's going to serve them for the long term. I think that's great. I like how that Nick Sleep over the past decade or so has been invested in this company, and he must highly rate the management team. I think that gives me a lot more conviction. But this is not an easy one for me at all. I would have to do a serious deep dive into this company to feel a lot more comfortable, but because that price is not really anywhere near where I want it, I'm gonna probably let this one go. Hi, just a quick update here. So I actually recorded most of this video right before the announcement that the CEO is going to step down and that there was a profit warning on ASOS as well. So look, how this actually changes what I've just done in this analysis is that I think that the growth rate for the next couple of years is going to maybe even be slower than I anticipated in my free cash flow model, my discounted free cash flow model. And I also think that with the CEO change, it would be interesting to see whether they change their perspective on having very low operating margins, and whether they're trying to, maybe the new CEO actually just wants to juice up the profit and make that look a little bit better. I'm not quite sure yet, so it does take a fair bit of investigation now into the new CEO and their future plans. But I would assume that the company is probably going to keep on the same path that they've been on. This might be an opportunity to buy at the cheaper price, since the stock price has fallen like 15% in the first hour of trading on the London Stock Exchange. That's Monday. So look, there's a little bit of a news headline there for you. If you want to know more about like a deep dive into this company to understand the CEO and the outgoing CEO and maybe the actual management structure, I highly recommend going through Hamish's course, because I know he's invested in ASOS and he has a deep dive into ASOS as well. So I would really recommend going and checking that out and signing up through the link in my description. Now, I hope this was something that you enjoyed watching. Now, don't forget about Hamish's course and my discount code if you want it. Now, I can take the criticism, so leave a comment about your thoughts, like or dislike the video, and I'll see you next time.